What's going on, guys, and welcome back to another video. So today I want to discuss four main topics. Firstly, I want to have a look through this week's Trading 212 portfolio update. I want to discuss yesterday's stock market crash as such, albeit only one day at the moment, so it's kind of hard to tell if that's going to continue or not. I also want to discuss this week's Trading 212 Hotlist, and finally I want to discuss one stock in the form of Gamestop, and just give a brief kind of synopsis on what I believe is happening with the stock at present times. But just before we get into all of that, can I please ask, as always, if you're new around here, to consider subscribing to the channel, as we are now only 8 subscribers away from our next mini goal of 650, and it'd be great to have that by the end of this month. And with all that being said, let's dive right into today's video. So the first thing I want to discuss briefly is yesterday's stock market. Now overall yesterday, across the board, all different sectors went down. We can see on screen here that they had their worst performance since last October. So you'd wonder, is this the start of a crash, or is it just kind of a small bit of a correction? So only time's going to tell over the next few days. The main kind of 2 or 3 topics why the market went down was firstly that the tech giants had a pretty poor kind of performance in terms of their reporting. And secondly, in my own opinion as well, I believe this is definitely true, that markets are currently overvalued. And even since last March, it was crazy to see that even though shops and retail outlets were closing, their share price was still going up in value, which kind of made little to no sense at the time. So I wonder now, is there a bit of fear coming into the market that a lot of stocks are in a bubble or overvalued? So I think a lot of people might start to sell because there is a fear there will be definitely a market correction. Now there obviously was other reasons as well, and 2 more of those was that large hedge funds started to sell off some of their long positions. Again, this will help provide some fear in the market, which isn't good if you're a long-term investor. But you can also look at the flip side of this as well and realize that there's always opportunity to buy companies on the dip, and that's certainly what I want to do in my own investing, which I'll discuss later on while I'm doing my portfolio update. I may also as well have examples here on screen where the Fed have also kind of put out some negative statements as such, which will again affect the market's prices. You can also see on screen now that the S&P 500 dropped about 2.5% yesterday, again, which is quite a large amount considering this is a very diversified ETF, all top 500 companies in the US, so it's not like one sector just went down, it's kind of across the board. So next we're going to have a look at my Trading 212 portfolio to see how it's currently performing and my plan of action to kind of take advantage, if I can, of this current downtrend. So as it stands, the portfolio is currently worth just under €6,300. We were up 8.2% or 475 or 77 euro. This time yesterday we were sitting up at 11% or 645 euro profit with over 6,450 euro invested. So we can even see just from the last day the dip in prices. So it went from 11% down to about 8.2, so we're down about 2.8% overall since yesterday. Now we'll just have a quick look through each of my portfolio pies very briefly in terms of what they're up or down, and then I'm going to discuss my plan of action to help take advantage of this. One of the main premise in terms of my overall investing style for this 30 odd companies is because they're all diversified blue chip companies, my main objective was to take advantage anytime they went into the red, as over the long term I'll have a better dollar cost average, effectively increasing my profit. So times like this where the market went down overall about 2.5% yesterday definitely gives me more buying opportunities. Now I did buy a few €100 worth of stock at the start of this week, but I still have about €700 or so on the sideline ready to invest as well. So let's quickly look through each of these portfolio pies to see how they're doing. We firstly have communication services, which is up 15.5%, so I'm quite happy with how Walt Disney and Facebook are performing at the moment, so we're going to leave those for now. In consumer discretionary, we are currently pretty much break even, we're only up about 0.2%. Companies such as Tesla and other companies such as Apple and Facebook went down a lot more in value yesterday. So again, the companies like Tesla are still overvalued at the moment. My current position is up 14.6%, so we're going to leave as is. But we can definitely see more opportunities for McDonald's and Nike. Both are in the red. McDonald's is down 2.5% and Nike is down 3.3%. Now at the start of this week, I put about €300 into McDonald's, as at the time it was down about 3%. I brought it back into the green, but it's after dipping even more now. So again, this definitely possesses more opportunities to buy on the dip to help improve the dollar cost average. Consumer staples pie is another pie you can take advantage of. It's currently down about 2%, and 2 of the 3 companies in the red. PepsiCo is in the green, up about 1%, But Coca-Cola is down 0.8%, and like McDonald's, this was one of the companies I invested further in at the start of the week. So again, anytime companies such as Coca-Cola go into the red, I'll be buying a lot more of to help improve the dollar cost average. We then have P&G is down 4.76%, so I'm definitely going to be buying more there also. Energy sector, we have three here in the form of Chevron and ExxonMobil, which are up 30.7% and just under 20% respectively. However, my iShares Global Clean Energy ETF, again, if you saw my video on Monday, we only had about 20 euro invested and we're up about 35%. We invested a further 80 euro, and at the time we were up 5% in the green. However, this has taken a turn for the downtrend and it is currently nearly down 6%. So again, huge opportunities here to invest in my opinion, one of the more high profitable ETFs in the long term, as renewable energy is definitely the way forward. In terms of my overall main two ETFs, the Vanguard SP 500 is up 9.7% and the Vanguard FTSE 100 is up 6%. We are up 11% in the financial sector, 3 are in the green. JP Morgan Chase is up 30%, Bank of America is up 21.5%, and Goldman Sachs is up 35.8%. We have 2 in the red in the form of Visa and MasterCard, both down about 3 to 3.5% each, so definitely huge opportunities there as well to buy more at a dip. The healthcare sector, we have 3 companies are up 11% overall. Johnson & Johnson is up 13.8% and AbbVie is up 17.7%, with Pfizer down 1.5%. Industrials up 4.9%, so just up under 5% there, so I'm quite happy with that. Waste management is down 2% at the moment, so again, more opportunities to buy there. We have nothing in materials. Real estate is up 1.8%. Again, we only have about 50 euro invested there, so once this does eventually go into the red again, I'll be pumping a lot more money in. And our largest sector so far is the tech sector. We have just under 1,300 euro invested here and are up 14.5%. All 5 are in the green. Microsoft is up 10.9%, Amazon 3.8%, Apple 26.7%, Alphabet Class A is up 22.8%, and IBM is currently up 2.5%. So again, in terms of my own investing, this will definitely possess great opportunities to dollar cost average, and effectively as a long-term investor, these are the kind of things you want to be seeing, especially if you want to invest even more in the market. So what I'll be doing, probably I'll wait until maybe next Monday to see how the markets are reacting after yesterday, because usually there seems to be a sell-off on Friday evenings and a kind of pump on Monday mornings. So I'll probably wait until Monday evening or Tuesday to see what companies I'm actually going to further invest in. But in my own personal opinion, I do believe that the majority of these companies will still be going down. They won't magically just jump back up in value. So I will be kind of holding off for the next day or so, and then I'll be putting about 300 or so euro at the start of next week, and let's see how that 300 euro goes. And if the companies are still going down in value, we'll have another 400 on the sidelines to pump in even more. I just briefly want to discuss Gamestop as well, which has went up over 135% in the last month, which is very extraordinary considering that it's a well-known company and like that doesn't happen too often. And one of the main kind of magics of this as well is that it's not following any normal standard investment guidelines in terms of there's no rational reasoning why this has happened. So we're going to just dive into a few of the main points of why it actually did happen. CNBC kind of summed up why this mania has happened with GameStop in terms of them going up over 100% in recent times. And it kind of started on Wall Street Bets, which is a red hot Reddit chat room, and they have been motivating each other to pile into shares and call options, effectively short squeezing GameStop and driving up the share price. Another important point by Jim Paulson is that there is a growing concern of a buying frenzy could potentially destabilize the market and hurt overall confidence, and as again that I discussed at the start of this video, as the markets have been going down anyway, this certainly wouldn't help. So it's certainly going to be very interesting over the coming weeks to see where this goes in terms of GameStop, if it's going to continue to soar in value. Some even predict that it's going to go up to the $1,000 mark, which again I find that very hard to believe, but obviously they're experts so they know a lot more than me in terms of this, and others expect this to have a massive crash as well. Either way, I believe because there's a lot of short bets in this that there's going to be a lot of winners and a lot of losers in terms of this stock. And finally, to finish up today's video, I want to have a brief look through this week's Trading 212 Hotlist. On the main overall leaderboard in terms of main users, we can see that Tesla and NIO, the 2 electric vehicle companies, are leading the way. We then have Apple and Amazon, 2 of the tech companies, and in 5th place is another company I hold, the iShares Global Clean Energy ETF. The top risers over the last 7 days are 2 of the companies that what I discussed, one in the form of Gamestop and also AMC Entertainment, are two of the companies that are currently in this speculative short selling, which is effectively pumping up the price. We then have BlackBerry, Nokia and Naked Brands making up the top 5 top holders this week. Now on the top fallers list, a list that no one wants to be top of, the 5 holdings are here. In all honesty, I've only heard of National Grid out of all 5 of the top fallers, so I can't really comment on these, but again, this is just in terms of what Trading 212 users are currently holding. So that's pretty much it for today's video. We went through 4 main topics. Firstly, we discussed my Trading 212 portfolio update. We had a look at yesterday's stock market downtrend. We then also had a look at GameStop and what is actually happening in this situation at the moment. And finally, we had a look at this week's Trading 212 Hotlist. If you found this video anyway helpful or entertaining, it'd be brilliant if you consider liking the video. And again, if you're new around here, it'd be much appreciated if you consider subscribing to the channel, as we're just 8 subs away from our next mini goal of 650. And finally, if you have any questions, comments or queries, please don't hesitate to comment below, and I'll be sure to get back to you as quick as I can. Thanks very much guys, and I'll see you all in tomorrow's video.